All right. Highlight to end the week is, again, what we said at the time it happened. Real-time analysis of where, but why price could respect areas. Now, if you look at the market putting in a high like it did around 70, how do we know it's going to look like that at the time it starts to look like that? Because if I rewind it, this could be a top. This could have been a top. But how could we stack probabilities that that is going to look like that in 10 or 15 minutes? Before this goes down, what could we use to stack probabilities that that's going to be the high of the day, or at least the high for a while? Couple things. Number one, I take you to shorts that are always in the market. Every time the market goes up or down, people have open shorts. When is the best chance for a price to go down? It's when you have less shorts in the market. Because when someone's short, they are now trying to buy that position to cover that position. They're now a buyer. So when someone's short, they're a buyer. So it really makes sense that if there's less shorts, there's less buyers. That's what the price of anything needs to go down, less buyers. So we have a Puke tool that shows a really high sample size of open positions. And when people puke, it's in this column and this column. So we want to see less shorts and shorts that as the price rallies, they say, screw it, I'm out. Then it goes down. How many times have you been through that where you're short, you're like, you get stopped out and that was near the high and it goes down? It's because you were short with a lot of other people and you puked at the same time. So let me rewind this and show people when this thing pops out. What do you mean pop out? It pops out here, but when you look at the 8-hour, it's not that big of a puke. That's a bigger puke of the day, but this is really nothing. Even though it shows up a lot there. So always compare it to how big is it. And then if I fast forward it a little bit, still same thing. Came out, but not really much on the 8-hour. So relatively speaking, not a huge short puke. Same thing there. Bam. But look at that. Look at this come out as the biggest short puke of the last 8 hours. How do I know it's the biggest short puke of the last 8 hours? It's the biggest red bar. And the red bar is attached to buy stops. We've been able to filter the MBO data to determine where buy stops come out. We know that most of the time people use buy stops to exit a short position. So we deduce that people use buy stops to exit a short position, that when those buy stops get elected, that there's less shorts in the market. It means shorts puke. Shorts puke. There's less of them. Less shorts, less buyers. Easier chance to go down. So this was the biggest short puke of the session. Came out at 70. That gives you, if you're bearish and looking to get short or fade, the step 2 or step 3 slap you in the face and say, what are you waiting for? Something else happened. A couple big purple buyers. The purple boxes are big aggressive buy orders that come in. Well, when they come in, you think, well, it's going to go up. But what if it doesn't? When big buying comes in, it doesn't come up. It's showing you an appetite for selling and it's absorbing it. That's also not all. Well, what do you mean, Anthony? Well, look at this green bar that just stuck out. Let me back it up and then fast forward it right there. This bar in this vertical is showing opened long and short positions. If it's green, it's an open long position. Now, conventional wisdom might say, hey, long positions, let's all buy it together. No, you want to see long positions be stuck. Why? Well, if shorts equal buyers, then longs equal sellers. So if there's a lot of longs, there's a lot of sellers. If there's a lot of sellers, there's just a better chance to go lower. That's all. So you got less shorts and more longs. Less shorts, more longs. Work back on the golden rule. What do you need for price to go up? You need more sellers and less buyers. But you need more sellers that are going to come. That's what you need. You need more sellers that are going to come to the market. So anyhow, this was the moment where we had said, hey, if you're bearish, what are you waiting for? If you're long, you absolutely have to get out. or cover something, because the probability of it dipping lower was, again, probable. This is order flow because you're following orders along with the intent of the order. There's all kinds of orders flying in and out of the market all day long. It's way too much noise. But now being able to filter the MBO data to get a sample size of open longs and open shorts and close longs and close shorts, that's the whole shooting match. That's going to immediately stack probabilities. So now you're the house and not the player if you're in a casino. Now, if you have good directional skills, I think there's a lot of people out there that have good directional skills. They're bullish, they're bearish, but they have very poor aim and fires. They have very poor qualifications. So they could be right and not make any money. They miss good trades, they catch the bad ones. So the point is step one in anybody's trading process is, are you bullish or bearish and why? But there's a step 2 and 3 that are vital, and that is using order flow to qualify and confirm where you're going to execute, where and when you're going to execute your bias. Now you're building out a strategy. And no two strategies are alike. They're just not. And so you go to a room and there's piggyback rooms out there, but I never heard of a piggyback room that people stay with and that they're great. Maybe there is some. That's not this. This is giving you the information to make better decisions in areas that are highly probable to work as support resistance, but as turns as your step 3. Step 3 in any process has to be, when do you pull the trigger? Ready, aim, fire. The fire in ready, aim, fire. But walking you through this highlight was, again, what makes a top in this case. You want to have less shorts and more longs. That's not just something that helps price go down. It's necessary for price to go down. Have a safe weekend, guys. See you in Discord or on Monday.